Is Friday the 16th of April 2010, and this is Brian Shannon from Alpha Trends. Let's take a look at these markets. The S&P 500 was down 1.5%, and not very big volume here. Biggest volume we've seen since early February, and I guess I have to share my screen with you to see that. So hold on 1 minute to get better organized. There we go. So we had the S&P 500 down on pretty big volume here today. And if you look at, though, it was down 1.6%, the NASDAQ down 1.2% today. We're still up near these highs, and we've been holding this rising 10-day, that's the red moving average, since it crossed back above there in early February, and we're still holding above it. S&P 500 right on, and you got to figure that that's pretty good, considering that, you know, a lot of people place, and don't get me wrong here, they're very important companies, but Goldman Sachs is not the market, fortunately, because Goldman Sachs was down 12.6% today. And Google is not the market either. It's not the NASDAQ. A lot of people, you know, give it more credit maybe than it deserves, but it was down 7.5%, that is Google, whereas the NASDAQ average stock, NASDAQ 100, was down just 1.2%. So all in all, it really wasn't a horrible session for the markets if you stayed focused, you know, away from the big headline stocks. Now, there's reason for concern when you have these big leaders breaking down like we have here on news as well. The Goldman Sachs news basically that they're criminals, and I don't think that was a surprise to anyone that people have been thinking that they're a criminal organization for a while, or at least maybe that's overstating it. But you know, there's a lot of negative sentiment, and has been for quite a while in Goldman Sachs. But realistically, you look at this weekly time frame even, and it continues to hold up fairly well. There's not a bigger breakdown here on the weekly time frame. Now, obviously, that doesn't help anyone who was long it today and lost 12.5%. But you know, the bigger level is right down here. We had seen earlier this year that we had broken this 162 level really in Goldman Sachs, and it started to decline, but then it squeezed those shorts, and now we're back to the downside. So really what it looks like here on the weekly time frame is just more of a sideways market that's possibly, breaking 150 would be the real big event that would get us back into a stage 4 decline. But it's not looking horrible, and as far as Goldman Sachs goes, I think unless you're going to day trade this thing, I think you want to stay away from it. It's a good stock to obviously to day trade, big volume, big volatility. But beyond that, no one knows what's going to happen for the future of this company. When you have such big volume like that, there's a lot of institutional indecision as far as what do we want to do with this company. Do we want to be buyers? Do we want to be sellers? And obviously, a big loss like that, percentage-wise, the sellers were clearly in control today. They took advantage of a couple of moves up to the declining volume-weighted average price to push the market lower from that level as well. It did finish off the lows a little bit, but we've got a damaged market here. As far as Goldman Sachs goes, you got to give it some time, let it settle in, and see what happens next, unless you're a very short-term trader. And I would say the same thing holds true for Google. That we had this prior important level, that this 545 basically, that held as support here. Now we're coming down to that 50-day moving average in that prior level. So I think on both of these big marquee name stocks, you want to basically just give it some time, let the market decide. You don't have to be involved in these unless you're more of a news type trader. Then there's just not there's nothing clear in there. Basically, is what I was trying to say. If we look at the S&P 500 again, what we had been focusing on the weekly time frame was this 2/3 retracement level that we were approaching it. That is from the 2007 highs to the 2009 lows, and we got up. Actually, the couple levels we've been looking at were this one right here from July of 2008. That is 120.02. And we popped through that, but obviously closed below it for the week. And for the week, we pretty much closed unchanged. Still, even though today's volume was so big, it was just running a little bit. It looks like at about average weekly volume or so. And anyways, we've fallen short of this prior scene of the crime, basically this breakdown point from the people were calling it the Lehman low, the Lehman highs, actually the Lehman levels, I guess. And we're as people have pointed out today, I think a lot of people were looking at this as an excuse or a reason to take some money off the table, just to some overdue maybe profit taking after we've had such an extreme unrelenting advance here. We got outside of this little channel that had been in. Now we're back involved in that. We're down to this trend line. We had seen when we look at the 10-minute time frame that the levels that should have held as support. Well, first of all, we broke this little level from yesterday and created a lower low. Then we came back up. That level became, this little support from yesterday became resistance. Then the Goldman Sachs news came out and really exaggerated this sell-off. But we had the market come down towards that 119 level that has been important as well. So this 119 area continues to be an area where, for now, that the buyers are stepping in. And we've got to look at this again as, this market has been kind of stair-stepping higher. And we're probably due for a little consolidation in here. We've got on the daily time frame a rising 10, 20, and 50-day moving average. On the 30-minute time frame, we're below the 5. Maybe we bounce up a little bit and then begin to settle in, and you could even say, well, would that create a head and shoulders pattern? It could create a head and shoulders pattern, but what's most important about this pattern setting up is breaking below and holding below that 119 level for, I'd say, more than a half hour or so. Then we would look at the height of this move, which is approximately let's just be real conservative and call it 2 points. That would give us an objective down near 117. And that's still realistic, and we'd still be in decent shape overall for this market if we were to get a move down towards that level. So again, looking at the daily time frame, we're right at that 10-day and still holding the 20-day moving average. We've still got an uptrending market. One volume day lower does not make a reversal, at least not yet. We'll see what happens. But remember how quick people were to call this day a top in Baidu. Remember how quickly people were looking to call this day here on big volume a top in the financials. Well, today the financials, what looked like big volume back there is now dwarfed by what happened today. And even the financials remain in an uptrend on the daily time frame. They remain in an uptrend on the weekly time frame as well for these financials. The market got a little overcooked, and now let's see the nature of how this this pullback is digested, and if we can, hold above some important levels. Financials probably 115.75 to 116. If we can hold above that level, then we're going to see maybe some more correction time-wise and just some rebuilding while this market kind of catches its breath and everyone has a chance to reassess a little bit. So until that happens, I think that that is until the market has had a chance to digest and really process the significance of these couple stocks breaking down and what it might mean for the market, looking forward to the next few weeks. We've got a lot of earnings reports coming out. That's been, I think the consensus is they've been generally pretty positive this week, but a big run up before the earnings, buy the rumor, sell the news type of event is what we arguably have going on here as well. So the NASDAQ 100, let's just take a further look at that. We had seen on the weekly time frame that we were targeting up near first these levels and then right up at about 50.5. We got basically up to the where we were expecting the possibility of supply to be released. Now a lot of times the technicals just kind of coincide with fundamentals, it seems, and the market kind of works together in that way. But what really pays obviously is price. And what we're seeing is that we've got a pullback in the NASDAQ for one day at least. We haven't really broken any significant levels. I think the more significant level for the NASDAQ is down near 49, and we could still see some bleeding down towards that level, and it wouldn't be a horrible event for the market. We've come pretty far, pretty fast again, and you take a look at this trend line and the channel that this market has been in. You could argue that we're back into that channel, and maybe we head down to test the low end of that channel, and that brings us down to that 49 level and 48.30, I believe, or what was it, 48.60. So in the NASDAQ 100, the Qs, we want to be looking at 48.60 and about 48.90 as well as potential areas of significance going forward here. The semiconductors had a great week. They were up big on Intel's earnings. So again, a mixed picture here. Intel gapped up and dragged the semiconductors with it as well, and we had a nice breakout in the semiconductors. If we take a look at a horizontal line here, we had broken past that resistance and got right up to the next level where the market was supposed to go to. So it's sprinting kind of between these levels. Now what we need to see is, how is the market going to digest this? Well, if you look at the last 3 days, so since the earnings came out in Intel, what is the volume-weighted average price been in the semiconductors? And that's what this gold line represents. We're right on it. So the buyers are still basically feeling good. Anyone who bought this over the semiconductors on average is in a winning position. So the buyers are still obviously in control. We're above a rising 5-day moving average. That 5-day moving average is above the 10, which is above the 20, and they're all advancing. We just had a real nice breakout. Even prior to the numbers coming out, we had seen the breakout and then the follow through as the market took a look at those Intel numbers, and we've got some good activity that the market makes these big runs. It needs to digest the gain. So again, don't be so quick to be calling this the top. We'll know well in hindsight what the top itself is. But again, the danger is in always calling everything a top because it looks like big volume. Well, Monday maybe we have even bigger volume than this, and the market gaps up and goes on to new highs. I don't think that's likely, but you have to keep an open mind and remember that on the larger time frames, the path of least resistance remains higher, and these trends don't turn really quickly most of the time. Now, doesn't mean you shouldn't be careful. Obviously, the financials again, down near 1610 and then 1575. That was the level in the daily time frame from back in October of last year. This 1575, and then of course below that, the big level that we had seen was 1540, and that's where we have that rising 50-day moving average as well. Now a sell-off down to that level would be a very devastating decline to anyone who's bought, especially these guys. What were they thinking buying that day? You have to be careful chasing extended markets, but before today, these markets were closing close to highs, and it didn't make sense to trade short. If you're short, I think that when the market breaks down this heavily, you look at it from a day trading basis and you say, well, as the market breaks down on heavy volume and then rallies up on lighter volume, well, what we want to see is again that the volume increasing on these declines and lighter volume on these rallies, followed by heavier volume declines. These are the types of sell-offs below a daily VWAP that can be sold short, either by shorting the XLF or buying FAZ, or and you can see here it's going to be the opposite. Big volume on this move higher, followed by low volume consolidation, another big run, low volume consolidation. So this is the same pattern we look for on daily time frames or on a 30-minute time frame. The volume that is a relative measurement, and it's something that we want to compare to based on the event. The event was it broke out hard here, the FAS. Well, relative to that, the pullback was on diminished volume, and then we had another thrust higher on increased volume, followed by another low volume pullback. So you're looking to buy these subsequent breaks higher with a stop below that prior low. So whether you choose to do that or not is obviously up to you. There's still a lot of opportunity in all these markets, obviously, and that's really what makes this market so special for traders, is because there's been great volatility, there's been great moves to capture on the way up, and now maybe for a couple days on the way down, we'll let it settle in and then see what happens next. Oil for the week, oil was down about 1.5%, 1.25%, it's still struggling to hold on above this little breakout area. I kind of thought that it was going to hold after this shakeout on Tuesday. I thought that, okay, now it's looking strong once again. I think, though, that breaking back below the lows of Tuesday would kind of put this attempted breakout into real question here. It's I'm again someone who is real reluctant to trade oil because I've never been had very good success with it. But we've got a clear level of prior resistance here that is acting as support near about 40.20. So if you're long, I'd say stop somewhere, maybe even below, just below 40, just to give it some benefit of the doubt here, because it's got such a nice looking longer term chart. Gold is another one that I stink at trading, and I thought this one was ready to get going once again, but it broke back down today. So and it gapped lower, and that's the problem in my mind with gold, is that it was making these higher lows. It couldn't get past the highs of a couple days ago, and now here we are back down again with a declining 5-day moving average. So I think you have to be on the sidelines if you're a swing trader in gold. The IYR actually had a pretty difficult week. The commercial real estate, these guys that were down about 3%, and that was, besides gold, the bigger loser for the week. We'd seen 2 strong down days. Obviously Wednesday, the market closed higher than where it did on Tuesday, but we had that red candle because it closed below the opening price. And you can see the volume has been increasing on this decline here, so that's not what you want to see. But we still have a bigger level that this market should be able to continue to hold, I think, at about 49.5. So we're coming into that level actually, and we'll have to see if it's able to bounce from there, or if this market is maybe now in a position where it needs to consolidate a little bit more through time, and allow this market to kind of digest the big the bigger volatility that it's seen this week. So if you guys have some questions, go ahead and type them into Twitter. Otherwise, I'm going to call this a